Hello and welcome to this week's episode of the Property Lifestyle Mastery podcast. I am Jackie Tomes, and on this show we're having open and honest conversations about investing in property in a way that doesn't just create cash flow, but it also creates freedom. From those that have been there, done it and bought the t-shirt, these are the highs, the lows and the lessons along the way from doing over £17 million of property deals, raising over £7 million of finance, and ultimately creating the holiday every 6 weeks lifestyle. So we're talking about everything on this show, everything from big picture strategy and maximising your potential right down to practical solutions. And today I am joined by Chris Irvine and Patrycja Hong, and these guys are joint venture partners. They have known each other actually just 1 year. They've worked together for 9 months, and during that time they've purchased 3 properties together, completed 2 refurbs, and they are well into the 3rd. And they've also had a deal agreed on their 4th purchase. So this is like, these guys are really flying. They're working with investor finance. And this is what this show is all about, how we can collaborate and work with others to create amazing results through property, to create cash flow, to create freedom, and to have a great time doing that along the way. So we're going to be talking today about how these guys have found each other and what they've learned about putting together that joint venture that is really working for them. So they are both amazing individuals individually, but when you put them together, it's really had an exponential result to what they can achieve. So without further ado, here is me with Chris and Patty. Hello, Pati and Chris.
Hello, Jackie.
Welcome, guys. I'm really looking forward to this conversation today. This is something really fresh and different, and I've got a lot of love for both of you two, and I'm excited to just really use this opportunity to reflect on how you two have come to be joint venture partners and working together, which is the subject of today's conversation. And you guys have been working together for how long now? Maybe like a year? How long has it been?
Not quite a year. So we met a year ago. I think it's probably been 9 months we've been working together.
Yeah, I think so. Yeah, around that time.
Really nice. Okay, cool. So we're just going to reflect on like who you guys are individually, how you've chosen to come and work together and form this joint venture partnership in property, and what some of the things are. I think it's nice because you don't often hear both sides of the story when you are hearing about people joint venturing, and I think it's going to be a really fresh perspective for people listening to say, why would 2 people come and work together? What did Chris see in Pati, or Pati and Luke, and what did Pati and Luke see in Chris, and how did that come together? And maybe some of the initial sort of bumps in the road that have come up along the way and how you guys have handled it. So tell me, how did this joint venture come about? Chris, do you want to kick us off?
Yeah, absolutely. So as you well know, Jackie, we're both members of your DMA community, both been in it just over a year. So we kind of started at the same time. And during the first couple of months when we were networking within the group, myself and Patty were chatting on WhatsApp, I think. And Patty said about meeting up for a coffee. So we arranged to meet up just on the outskirts of Cardiff, which is about midway point between the two of us. And we upgraded our coffee to a lunch, actually, and both brought our partners along. So Nikki came from my side and Luke joined Patty. I think you brought your dogs as well, didn't you, Patty? Or one of them. One of them. Yeah, so that was the first time we met up in person, and Patty and Luke were telling us what they were doing. And I jokingly said, well, not jokingly, they thought I was joking, that I might be interested in working with them as an investor. Yeah, so that was kind of the starting point. Patty, do you want to add anything to that?
No, I think that's exactly what happened. We definitely thought it was a joke. We were just freely saying what we're going to do, how we're going to start working, because obviously we didn't think about joint venture before we started working with you and Dave. So we're kind of just explaining what we're gonna do, and Chris was like, "Oh, what if I was interested?" And we just both laughed because he thought it was a joke. And then Chris was just looking very seriously. And yeah, he actually was interested. So that's how it started.
I think it's really fascinating because I think I love both of you guys, both parties involved in this joint venture. But I think Patty, on your side, you've always been so reserved about your talents and skills, and it's been something that obviously we've been working on together to build up that confidence in what you're really bringing to the table. So when you were meeting up to have a coffee with Chris, or what I've got upgraded to lunch, what was your intention in going to that meeting with him?
Um, I liked Chris from the start because obviously the first time we met was online in like a KPI session or something like that. And I wanted to connect with more DMA members in person. Obviously, Chris and Nikki, they live not too far from us, so it was just quite convenient as well. I did not have any expectation in terms of this meeting, as in, like, I wouldn't ever think of Chris as someone interested in working with us. It was more in terms of just connecting with other members of the community. So we were just basically telling Chris what we do and what we've done before, what we're planning on doing, our vision. And I think we were maybe feeling more natural. We didn't feel like we were pitching.
Yes.
That's where it maybe came off better than what it normally would. Yeah.
So you were just trying to make friends, basically, just
Yeah.
like connect with other people who are like-minded. So, like, Chris, what was it? What was it that you? Well, that's Patty. Actually, first of all, what was it that made you like Chris? What was it that you saw in him that made him just feel like that was someone I'd like to be friends with?
He's very funny, obviously. I like funny people. Um, I think he's just very authentic. You can just, I don't know, we just clicked, I think. I really like Nikki as well, his partner, and we are all friends now. Um, yeah, I would say probably and he's really good with people. So I think that's just probably what
What drew
was,
you to him?
yeah.
Nice. And what about for you, Chris? What made you be interested to work with Patty and Luke?
Well, just to step back one moment as well to when we first met, in terms of expectations from the meetup, exactly the same from my perspective. I had no agenda other than this is a person in my group. I'm not the best at arranging to meet people and kind of expanding my network. So this was kind of a really good opportunity. And similarly, yeah, when we first met up on a Zoom call, I think Patty mentioned it was a KPI call. I can't remember. Um, it was a similar thing, very likable person. I I like the fact that they're doing a simple buy to let strategy. There's a lot of more glamorous strategies in the property world that a lot of people get drawn to. I've dabbled in a few of them, but something about buy to lets I just really like. So when we did actually meet up, I got to see her and Luke's dynamic together, and just thought that they're a really likable couple. Good energy between them. Very knowledgeable about what they're doing, and I just thought these are people that I could see myself working with. I've done a couple of joint ventures in the past, and where they were on their journey, fairly fresh to it. I think you had two properties at the time, Patty, that you'd done BRRs on, so buy, refurbish, refinance. Um, I could see that the money side of things was probably the bit that was holding you back. You both seemed very skilled and confident at finding the properties and refurbishing them. Um, Coincidentally, that's the bit that I struggle with because of time and energy, I suppose. So it was like, well, I feel fairly confident in raising finance. Um, so this could be a really good conversation to progress further. And that's essentially how it worked for me.
It's really nice. How does it feel hearing Chris say that, Patty?
Oh, nice. Yeah, that feels very nice. Thank you, Chris.
I think it's really interesting hearing both of you talk first and foremost. You just like, I like this person. Like, this is someone who I kind of enjoy being around and I appreciate their company. And it's funny because I almost think sometimes when you're thinking about joint ventures, people forget about that part of it. Like, this person is going to be in your life a lot. And
Mhm.
if you actually get on and create a good rapport and friendship first and foremost, like, it's just, I know it's the basis of a good relationship. And I think so often we're so focused on just like trying to find these people to work with that we kind of forget that relationship fit bit first and foremost. And almost because you guys have almost just accidentally come together as friends, first of all, it just created a lovely foundation, which is just really nice to hear that perspective from both of you, and then obviously then building on that, what, you know, Patty, you're seeing Chris's people side, and obviously that feeds into your ability to think he's a great person to be working with if he's on the raising finance side, and Chris, you're appreciating what Patty and Luke are bringing on the property side because you've also done a bit of it and
Yeah.
realised that's you know, that's hard as well. So to be able to leverage that, and I think that's something that you can kind of, you miss the bits of yourself that you're great at that someone else can see, and so I think it's really refreshing to have that perspective from each of you.
Yeah, absolutely. I mean, you use the word leverage there, and sometimes when we're talking about people and utilizing their skills, the word leverage can sometimes sound like we're taking advantage of them. Um, but I think when you can work out that working together gives you a better result than trying to work on your own. So there's three of us working together now, and I'm sure the outcome that the three of us are getting is better than me doing it three times myself. Um, there is a saying for that, which I always mess up, so I'm not going to try and attempt it. And as we talked about before this session, Jackie, you teach focus. So the first thing that I remember when I joined DMA was how you really drill down on us to focus on one primary strategy, whatever it is, but just make sure you're focused. And I think what myself, Patty, and Luke have discovered is that we focus within the focus. So our strategy is buy, refurbish, refinance. Patty is absolute ninja at organization and operations. So, when it comes to sourcing the properties to view and dealing with the solicitors and the estate agents, she's all over that. Luke, similarly, on the refurb side of things, um, he's organising the team so well. I think our first refurb, we brought it in under the time budget of what we forecast, and also on budget in terms of finances, which just doesn't happen. So this was such a cool thing, and then on the finance side of things, I'm working with investors and bringing in the money that we need to do the projects and making sure that the investors are happy with the returns they're getting. So yeah, having that focus within the focus is kind of our USP, I think.
It's really nice. Yeah, you just each focusing on your zones of genius, basically, where you're in your flow and you're enjoying it, which basically amplifies everything and makes it way more enjoyable. I'm going to take us just a quick slight cul-de-sac before we carry on about your JV, because I want to touch on the fact that you guys are doing a very simple model. You're doing buy to let, you're doing buy, refurbish, refinance. This is what we started with also. And I definitely know that I felt similar to kind of Patty, what you've said to me in the past, just like it not feeling like sexy enough. And you also alluded to it, Chris, like other sexier strategies that you have tried. And yeah, just tell me a little bit more about how what's helped you to make the decision to focus on something that's maybe the less sexy inverted commas option. Why is that a good thing to do?
I think, well, it's much easier to scale this model because it's so much low risk. It's very simple. The refurbs are not very complex. There is no planning involved. There is no extensions, conversions. It's literally just an upgrade, really. There is much less regulations with regards to this kind of model. And I think lately I'm just hearing so many, mainly in networking events, people that do HMOs or commercial conversions or similar. I'm just hearing so many horrible things that go wrong all the time, and they just complain about it. And it almost makes me feel a bit guilty inside because we just don't don't have that. And I'm just like, oh, why do I even think about wanting that? It's not something I don't want to be stressed all the time. Like some people are just, you can see how stressed they are. And yeah, I think you can 100% build a nice, profitable business with a simple model. So
And I think also as well, like same from you, Patty. Like I've been hearing a lot of horror stories recently about people who, when I was starting, I was like, what they're doing is way sexier than what I'm doing. They are the cool people doing the sexy thing. And I've heard a lot of things in recent times about how bad stuff has actually gone for them, because obviously it is higher risk doing some of these bigger, sexier models, which ultimately, yeah, maybe we are plodding along doing the simple stuff, but it's a lot lower risk over time. And so therefore, from my perspective, a lot less chance of a big catastrophic failure compared to something that's quote unquote sexier. Anything you'd add to that, Chris?
Yeah, absolutely. I mean, from my perspective, the reason why buy to lets work, because I'm raising money from investors, it's a very transparent and clear strategy. So you know that because it's tried and tested, it's been going for decades. You know that when you purchase a product for this amount of money and you need to put this much into the refurb, and through Patty's calculations, we know that it's typically going to value up to this amount of money, which allows us to get the investment money back out. So my number one priority is always, can I pay back the investor as promised? If the answer is no, or maybe,
Maybe.
it becomes a bit risky. So when I first joined DMA, I was looking at doing serviced accommodation, so purchase to serviced accommodation. We did all the figures on it, and yeah, it was good. You know, the returns are very sexy, but there's always the risk. What happens if? And as I know myself, you know, I do enjoy a bit of serviced accommodation, but it's very much ebbs and flows. So you get really good months and you get really bad months. And if you start relying on that cash flow of the really good months, which I have been guilty of, you can come unstuck very quickly. So yes, it's a little bit boring. It's a little bit safe. I like that. I like stability. I like to know that what happens this month will happen next month and will happen for years to come.
Well
And
said.
if you want to scale up, you just do more of it.
Yes, exactly, which is what you're laying the foundations for at the moment. So tell me, first of all, actually, Patty, let's just get a little bit of context about where you're operating. Like, what area of the country are you sourcing deals in?
we operate in South Wales, mainly the valleys of South Wales.
And why is that a good place to invest in?
Very high rental demand, lots of tired stock that needs upgrading. The yields are quite high in comparison to most of areas of the UK. So it just works. I know that there is probably lots of places in the UK that the simple buy to let doesn't work anymore, but it still works in this area. And lately, actually, there's been a lot of investments coming into this area, so the capital appreciation is quite strong as well.
It's a great opportunity. Absolutely love it. Okay, so tell me then. So you guys, let's rewind the clock again. You go out and have a coffee that turns into lunch, and you're like, oh, ha ha ha, let's maybe work together. What happens next?
Dave comes in.
Go on.
Well, we never done it before, so obviously this is something that you guys specialize in, so we knew that Dave can help when it comes to like contracts and things like that. So he was very helpful with sort of helping us understand the legal side of it, and the shareholders agreement that comes in place, and the responsibilities of both parties. So yeah, I think that's probably was the next step, I would say.
Nice. So talk me through. So you were like, we think we might want to work together, and then you were like, okay, but so what happened was if we want to do that, we're not really sure exactly the logistics of how that would work.
Yeah.
So you have a conversation with Dave, and tell me what the outcome of that conversation was and what you then subsequently did.
I think I wanted to fully understand the contract, like every single part of it.
I can remember seeing the messages.
And I think Chris was more relaxed on that side. Yeah, I think we're just going back and forth a bit just to make sure that everything is clear. We had obviously a few more meetings with Chris as well. It wasn't just decided there and then. And yeah, eventually we've decided on the company name, and yeah, signed the contract. We found the first deal quite quickly, actually, and it all started from there.
Nice. So you set up a company together. So tell me how that company is structured.
So Chris already has a limited company, and we already have a limited company. So the joint venture company is structured in a way where both of our companies are 50% shareholders, and the three of us are directors.
Nice. So that's Pati and Luke and Chris. So the three of you coming together. And so the contract that you had to set up for that tell me about that.
That was, well, first of all, we've signed heads of terms agreement, which outlines what will be then written in the shareholders agreement, which is more of a legal document, I would say. So the heads of terms kind of like summarizes it, and then the proper, more detailed information is in the shareholders agreement. So that's
nice. So what sort of things did you put in the heads of terms agreement then, and who wrote that out of you guys?
So sort of the things that we are responsible for. So Luke and I and our company would be responsible for finding deals, the acquisition of them, dealing with all the parties, so solicitors, estate agents, letting agents, builders, and so on. We would be responsible for renovating it, the refinance, and also management of the joint venture company. Whereas Chris's company would be responsible for bringing in the funds.
Nice. Anything to add to that, Chris?
No. And this is exactly what Patty said. She's into the detail and I'm not.
You're very happy. You found your person.
Yeah.
Okay, nice. So then you get your shareholders agreement drawn up. So you set up the company first. Just like really break this down for someone who's never done this before. Did you just go and did you get the shareholders agreement sorted before you set up the company? The company first. What order did you do it in?
The company first, and sort of you then decide on obviously the shareholding and all the details within the company. The shareholders agreement, I believe, needs to be signed prior to completing on the first deal. So we've done a little bit later, but we had it all sorted before completion of the first project.
Nice. Do you remember what some of your questions were about the shareholders agreement, Patty?
Oh gosh. Just
Or concerns?
It was mainly the language, because obviously it's legal language, so I just wanted to sort of understand what certain things meant, but I probably don't remember exactly what. I knew that we had to sort of sort out our wills and lasting power of attorneys. I think that's the part as well that needs to be all in place when you sort of have a joint venture company. So they were obviously mentioned in the agreement, but we just didn't really understand what it was at the time. Yeah.
Nice. And so then on so Patti and Luke, so on your side, so as I understand it, Patti, you guys you're finding the property, you're doing all the refurb, you're managing the company, and then Chris, on your side, you're working to raise the finance to do the deal. So tell me a little bit more about what that's kind of entailing on your side.
Telling people what we're doing is kind of the first step, because there's no hard sell involved in what I'm doing. It's really about letting people know what we're doing, and sharing the journey as we go along, and trying to attract people to reach out to us to get involved. So there's been a little bit of networking involved, not as much as I'd like to do. Life's pretty busy, so currently I'm relying on what I would call my inner circle, and I have found a few interested parties that have helped us fund the first few deals. So that's all going really well. Yeah, I don't think there's anything else to add on that front. It's really, like Patti mentioned at the beginning, I'm a people person to a certain extent. So it's just about telling people what we do, what they can expect to get back from it, answering questions about worries they might have, and reassuring them on that front, and then going for it. Yeah.
Nice. And so you're working with investors, and then tell me about any other finance that you're using as well. Are you buying in cash? Are you working with bridging finance? Just talk to me about the full picture of how you're financing it all.
Do you want me to go on that one, Patti?
You can, yeah.
Yeah. So our model is very simple. We buy with cash so that we can negotiate to the best of our ability with the estate agents and sellers. We do the refurb also with funds that we've got in the company, and then we tend to put a tenant in, get the property valued, and then put a mortgage on it to release the funds, which then become available either to pay the investors back or to recycle into the next project, depending on the term of the investment. I'm putting some of my own funds into the deals as well. One of the challenges we discovered along the way is that when it comes to refinance, whilst you can purchase with 100% of investor finance, a lot of the lenders like to see some of your money invested into the purchase. Now, on the first one, we did this a little bit backwards. So we used investor finance to fund the first deal, and then use some of my money on the refurb. But what we're doing moving forwards is kind of shifting that. So we're using some of my money on the purchase to satisfy them lenders when it comes to refinance.
Got yeah. Okay. Nice. I mean, great to know what some of your main lessons have been then from setting all of this up so far. What have you, biggest things that you've learned, or like if you were setting this up again, anything that you would do differently? Who wants to go first?
Well, that one I just mentioned is probably the lesson I've had, and I think Patti would agree with that one as well, because we didn't really know that, and the only reason is through trying it. All my previous purchases have been in my sole name, so it's always been my money. I've not used investor finance before, so there's been a lot of lessons along that way. When working with investors, you really need to listen to what people want and what their worries are, because I think a lot of the time, when we're looking for investment, we almost dictate what their problems are without listening to them. So to give you a good example of that, one of the unique things I was offering to my investors originally was monthly installments on their interest. So rather than rolled up interest, I would offer them a cash flow solution. So for some people, this works. But for a lot of people, they don't actually need that, because a lot of the people I'm working with have great income, and the money they're using is for the investment is their savings or their pension, and they don't necessarily need the income on a monthly basis, and it might actually hinder them to have that. So yeah, really listening to what the people we're working with are looking for, what problems they've got that we can solve. That's definitely a good bit of advice there. Patty, anything from your side?
This is a hard question for me because I feel like working with Chris has been so smooth. We haven't had a lot of issues apart from maybe what you just said about the refinance and obviously the way you structure the purchase. But just sort of working together, I can't really think of anything. But obviously that's not going to be always the case. And as you said, Jackie, at the beginning, I think the friendship side, the relationship side is so important at the beginning, because even if you probably have issues later on, it's easier to resolve. And maybe because we obviously are friends and have a relationship first, maybe that's why we kind of, it kind of works out easier. When we sort of try to work with someone at the beginning, we also sort of ensure that our values align, and Chris's values and our values are very similar. So we just, it also helps because, the same things are important to all of us, and it just makes it so much easier.
Yeah.
It's really great. That's where my head was going as well, to talk about values. Now, can you just, like, for anyone who's listening to this who doesn't know what we're talking about when we say values, can you just explain what that is and how you figure out what they are?
The things in life that are just the most important and sort of that you live by, how you figure out what they are. I think it was actually part of DMA process at the beginning that and we were working with Dom we had a session with Dom to try to figure out. So he was kind of like, you kind of like start from lots of them and then you narrow it down to pinpoint the 4 or 5 most important ones.
Really nice. I think, and I obviously, like, there's a community of us, and we're only working with you guys individually because we feel that we've got to know you, that you share our values. So the odds are that people within the group, there's a good chance that you will have shared values. So that's yeah, a nice byproduct to see the values like spread and create the love between other people as well. It's really, really nice. So
Yeah,
that basically, go on, Chris.
just to add to that, values to me, I guess they're like the truths that we live our life by. So what we believe in, and how we want other people to kind of live their life as well.
Nice. And would you say that you guys were actively trying to suss each other out for values, or it was just more of an intuitive feeling?
Intuitive from my side.
I would say so, yeah.
Yeah. I mean, it's like Patty said at the beginning, we became friends first and then started working together. I don't want to work with people that I don't consider to be friends, if I'm honest. Life's too short. We spend a lot of time, or maybe we choose to spend a lot of time, I don't know. But I don't just want to be talking to somebody about business and then not having any interaction with that person until the next business transaction. It just doesn't work for me. And that's been the case with me in life ever since I can remember.
It's a nice way to live life. Yeah, I love it. So tell me then, guys, what about the future? What's like the plans from where you guys are going from here in the company together?
Keep doing it, keep doing more of it. From my perspective, that's nice and simple. Not go too quickly. So keep it sensible. Make sure that it is scalable. So I think the plans for this year. So we did one property last year, and we've got a couple more on the go at the minute, and would like to do a couple more to finish off this year. So another 4 this year, and then start doubling up on the next few years. That would be my intention. Patty?
And then, oh, we're gone.
No, I agree with that. Yeah, so we just refinanced one, started a project, refurb on another one, and we'll be completing soon on a third property. And yeah, I think we can do another couple this year. I think that's a good pace, probably. Yeah.
And then what's the ultimate plan? Is it to build a portfolio and hold it together? Are you planning to sell it in the future? What's the long term?
Old.
Yes.
And this was all part of the conversations at the very beginning, when we were doing the heads of terms, what was our intention? And again, that comes down to shared values and kind of a shared vision as well. I mean, the vision is different, but the principles of the visions are the same. Yeah, so to create long-term reoccurring income from assets that go up in value as well.
Really nice. And what happens if something were to change in that circumstance? Obviously, you've got this shared plan of what you're heading towards together. Have you got provisions in the shareholders agreement for what happens if one of you want to get out of it? How does that work?
Yes, we do. So there are exit clauses in the shareholders agreement. So there are different options depending on if one of us would like to exit or sell. So for example, if Chris wanted to exit, then I think we get first dips on his shares so that we would become majority shareholders. So it is all possible. So it's just probably it would just be a conversation. So it's not, once you decide something at the start, it doesn't mean that that's what's gonna have to happen. There are obviously things happen in life, so you can't predict everything.
Yeah, it's the prenup.
Yes, exactly. And Patty, let's circle back to what you said at the beginning of this conversation that you maybe weren't sure about joint venturing with someone, maybe a couple of years ago. Like, what changed your mind on that, and how do you feel about it now?
You guys changed my mind on that. Yeah, so because obviously when Luke and I started, we were working with private investors, so just loan agreements with fixed interest. Um, I don't know, we had this maybe negative opinion about joint ventures. Didn't want to we were scared probably. It was fear. It was fear of working with others. And I think the way you and Dave presented it to us, and obviously shared your experience as well, and shared your process of how you onboard joint venture partners, that kind of helped us. And also just meeting Chris, probably that made it as well. So, and realizing that, yeah, you have to have a relationship first and a friendship. And another strong factor was you guys showing us that we can scale much quicker doing that as opposed to working by ourselves.
Interesting. So for you, it was just being able to see like the journey and the step by step to get there. So it wasn't so much of a big step into doing it. Is that kind of
Yeah,
the sort of summary of what you said there?
yeah, I would say, yeah, I would say so.
It's really interesting because I think that's probably a lot of people's experience of most people when we start working with them are like, I don't want to do joint ventures, and it takes people a varying amount of time, but most people do come round to it eventually, and obviously you've come around to it quite quickly, and it seems like that's a really good thing that you did because you guys seem like you're such a lovely match to working together. What's been your perspective of joint ventures, Chris? It sounds like you've had a more positive perception of them perhaps than Patty did.
Um, yeah, I've had good and bad experiences with joint ventures. Again, a lot of it comes down to just making sure you get on with that person, that you're aligned. Um, you know, I remember going on my first property summit and I got friendly with a group of people in front of me. And there was four of them. There was two girls that were friends, and there was two guys. I think the guys were friends. And by the end of the weekend, they formed a company together, and they were going to like buy houses. Anyway, the next time I spoke to them, they'd all fallen out. And it's like, well, you met each other at a weekend conference, and it's like you got married. It's like, what did you expect? And there was 4 people in it, and yeah, they were all from different parties as well. So um, the thing I love about joint ventures, because I've been doing property on my own fundamentally, it's a very lonely space when you're doing it on your own. It's lonely when things go wrong. And surprisingly, it's even more lonely when you've got something to celebrate. And that's what I found with it. So by having a joint venture, when things aren't going well, you can talk things through, you can reassure each other, you can support each other, and you kind of half the burden. But when things are going well and you've got like a success to celebrate, success celebrating with 2 or 3 or 4 people is so much more fun than sitting in on your own with a bottle of champagne. I mean, that's pretty.
It's a lot of calories.
Yeah, it's a lot of calories. I know we still have 4 bottles if there was 4 of us. So yeah, that's for me. It's do your due diligence, of course, always. But don't be fearful of it, because there's a lot of advantages to it. Like Patty mentioned, you can scale quicker. And okay, we're every property we do, we split the profit. So it's not like when I buy a property, I get 100% of the profit. But the thing is, the time, we could probably buy 3 properties in the time I could buy 2, or sorry, 5 properties, because it would scale up. And that's kind of what I'm getting at, is that you can go faster when there's, or go further when there's more of you.
It's really nice.
Just be there to
Yeah.
support each other.
More fun, go faster, and each get to focus on the parts of the process that you enjoy the most. Really nice. So
Yeah.
let's bring this to a close then, guys. So I'd love to know from each of you your key takeaway that you would like people listening to this to walk away with. Perhaps think about those who are maybe considering joint venturing, but they're not quite sure if it's for them. What your main piece of advice or takeaway that you'd like them to take forward off the back of this discussion today. Chris, I'll come to you first.
Be clear about what it is you want from the joint venture. How will it benefit you and your journey and your vision? How can you benefit your joint venture partner? So what can you bring to the table, and make sure that you're clear about that. That's quite simply it. It's clarity. Just be clear on all counts what it is you're after and what it is you want.
Nice. And Patty?
Make sure you get on well and that your values align. I think that's probably the most important thing. And be more, if for someone who's sort of a bit scared but thinking about it, just be more open-minded, because not all of them are horror stories. You can have something very nice if you're more open-minded.
It's really nice. And I think I'm going to give my collective key takeaway from hearing from both sides of you guys is that you're like, I know both of you guys are brilliant. Like, I wouldn't be working with you if you weren't. But I think the fact that this has kind of come about off the back of you guys just connecting with other people who you want to be friends with. You've not tried to be anything other than yourselves in your interactions together. And that natural authenticness that is just the brilliance that you guys naturally are has clearly come through to each other. And I think if everyone, everyone's got their own unique brilliance, if everyone could just relax, be themselves, and stop trying to put on any front that you feel you should have to have when you're trying to bake business connections, then I think much better, more genuine, far more fun business connections are ultimately what come out of it. So thank you so much for sharing so openly, guys. It's wonderful to hear your collective stories, and I wish you all the best for the years of portfolio building ahead. So much love for both of these guys. Make sure you are connected with them off the back of this episode to keep in touch about the projects that they're up to. They're really doing amazing things, and these guys are just getting started. So if you're not already connected, make sure you are. Their social media links are in the show notes. But I'll also read out their email addresses now in case you can't find them or get there right now. So Patty's email is info@whitepropertyline.com and Chris's email is chris@homeinhand.co.uk. Fantastic. So this time next week, you're going to have myself and Dave talking about the real reason that so many property investors struggle to get results, and this is the brutal, honest truth. Really fun episode. I've really enjoyed recording this one with Dave. So we'll be here Friday next week. Until then, have a fantastic week ahead.